Hello. Oh, blimey, that's a bit loud. Sorry about that. So, as you can see, I'm not even on the presentation. Good start. Right, there we go. So, welcome everyone. Q3, still bald, yeah. Q3 performance update for 2021 on eToro. Usual stuff applies. This is obviously being live streamed on Twitch at the moment. Some people may be watching this on YouTube. If you are, there's no point in asking a question because I probably won't answer it because it's not live if you're watching on YouTube. So there's a few disclaimers and stuff that I have to go through as usual. Talk about how I'm going to be presenting stuff, and then we'll get stuck in, I guess. So, yeah, if you could save your questions until the end, then that would be ideal, and I'll try and answer as many as I can. Try and keep your questions on topic as well for Q3, Q4 of this year. If you have more broad questions about markets or about me or stuff like that, then there's a Q&A live stream next week on Wednesday. So you can ask those kind of questions in that, and I'll be streaming for a longer period during that as well. So there'll be opportunities to ask me other questions then. So here's the usual disclaimer. I am not a financial advisor. This is not financial advice. I don't know your personal circumstances. I'm talking about my own portfolio on eToro, which you guys, hopefully most of you will be copying, but some of you won't, some of you will. General views on the market and things like that, but none of this constitutes financial advice. Obviously, do your own research. This is basically just for educational purposes, marketing purposes, and trying to share a few opinions, but certainly not anything more than that because I don't know your personal circumstances. So I hope that's clear. In terms of what we're going to go through, same as usual, a quick introduction about me. I know that there's a lot of people, a lot of you guys have been copying me for a long time now, so there's not too much need for me to introduce myself, but the slide's still there anyway, and I'm still going to do it. I'll talk about my strategy and general approach to trading and investing. So hopefully that works out well, and you guys can kind of get an insight into how I think about markets and how I approach managing my portfolio. Then we'll look at the trading highlights and the markets for Q3. So we'll look at the benchmarks. We'll look at year to date and for the quarter as well, and then look at some of the things that were driving markets during the quarter. And then after that, we'll look at Q4 and into 2022, looking forward, what I'm expecting, what some of the risks are, and where we're planning to invest going forward. And then right at the end, we'll have a Q&A as well. So yeah, hopefully you guys enjoy it. So I know some of you are hoping I'd be wearing the orange hoodie, but instead I have a photo of it. So yeah, my name's Jay. I'm from the United Kingdom. I've been investing now for over 10 years. Started out very small, essentially investing, what little savings I had. I'm fully self-taught. I taught myself everything I know really for the most part about trading and investing. Up until very recently, I recently took CISI level 4 investment management and passed that last month, if I remember right. So I am now actually qualified for this, which is cool. It's kind of interesting actually, having self-taught myself everything about investing and then going and diving into, a more formal way of looking at it. That was actually kind of an interesting experience for me. But yeah, so generally my background is in gaming and events. I used to work for a company called Multiplay and Game in the UK. Before that, I worked in logistics. I would say that logistics and esports, I guess, in terms of working, the areas that I have the most background in. But I'm generally a pretty entrepreneurial person. I like technology. I like anything, anything smart devices, stuff like that. So you'll see me investing in renewable energy and all kinds of interesting new growth stocks and disruptive technologies. Those are kind of the areas that I focus on the most. I'm fundamentals focused. I could have put fundamentals, I could have put product there. Really, they're kind of the two go hand in hand for me. I like to look at the underlying numbers of the business. So that means the revenue and the margins that they make on the products and the underlying business models. But I also am very focused on products as well. So I really believe that a good product will sell itself, and that a good idea should be quite a lot easier to grow and gain adoption and make money out of than a product that isn't actually really that good overall. So I'm very driven by looking at products when I'm looking at investing. And again, looking at things long term for the future and disruptive technologies and things like that is the way that I like to invest. I went full time as a popular investor in 2017, so over 4 years now doing this. Quit my job and have been have been doing this rather strange job since then. Before that, I joined eToro in 2013, so I've been trading on eToro for a long time, and I was also trading before that, as mentioned, with the 10 years, over 10 years of trading now. My compounded annual growth rate is over 45% as well, which is a number that I'm quite proud of, and it's kind of my stretch goal, my stretch target for each year. Really, realistically, no investor in history has ever managed to make those returns consistently for anything more than a 5 or 10 year period. I am, I have done that for almost a decade now on eToro. I'm certainly getting close to it. So, my goal really is to try and keep that as close to 45% as I can. But as my AUM grows and as I get older and maybe can't keep up with technology quite as much, it's expected that realistically that number is likely to come down. But my goal really is to try and get as close to that as I can. Some other stuff about me. Generally consider myself an environmentalist. I'm very political. I've been interested in economics, investing, politics, all kinds of stuff like that since the age of about 13, 14. And really, I'm just a very curious person. And that's kind of, I think, what led me into investing as a job, and even esports and events before that. And when I got into Bitcoin and cryptocurrencies, it's all really because I'm just super passionate about learning about new things and interested in how the world is moving forward. And the picture on the left is my current trading setup. So if ever you wonder where I'm sitting every day doing this stuff, that's where. So anyway, taking a look at my track record a bit and some of the bigger metrics. Many of you will know that towards the start of this year, I was copy blocked. Despite being copy blocked at an AUM limit of 75 million, my AUM is actually at around 150 million. It's been stable throughout the year, so I don't foresee myself becoming copyable anytime soon unless eToro change the rules. So for the time being, if you're waiting to try and copy me, it may well be quite a long wait. My CAGR, the actual number for my CAGR at the moment, based off the start of this month, was 46.58%. I've still got over 25,000 copiers. So even despite losing copiers throughout the year, having been copy blocked, the amount of money that's set copying my trades has still remained stable at around 150, 160 million dollars. My lifetime return since joining eToro, so it's not really my lifetime return, but my eToro lifetime return is approaching 1,900%. Who knows? Maybe today's the day where we get through that barrier. But I put 1,850 because I didn't want to try and preempt it too much. But we're getting close to 1,900%. So if you copied me from the day I joined eToro, that's how much money you would have made. If you join later, then obviously you're still waiting for that compound effect to kick in. But hopefully, if you've been copying me for 2 or 3 years, you should be into triple digit returns by now. So yeah, that's that. In terms of my strategy and approach, these aren't really in any particular order, but I'm generally a kind of a thematic investor. I like to look for future trends and then find the companies that I like within that. often because they are in the future. A lot of the companies aren't public yet, so it does make it difficult to find the actual investing opportunities within some of the trends that I look at. But product is at the focus, and obviously the future trend. I invest for the long term, and as mentioned earlier, I also use fundamentals a lot to determine what kind of positions I want to get into. And the revenue, the cash flows, all of those things are things that I'm looking at regularly. If there's an IPO, I generally look at the S1 filings if it's in the US, and try and figure out what the situation is with the company, who the shareholders are, who the board members are. All of that to me kind of sits under the label of fundamentals. Beyond that, the next step, although again this isn't like necessarily the order in which I do things, would be ESG. So environmental, social, and governance. So I try my hardest to be an ethical investor. That means I won't invest in anything to do with the military or weapons and guns and things like that. Surveillance is another area that I don't really want to be too involved in. Anything that I think is broadly unethical. So I don't invest in gambling companies. I don't invest in I don't know, lots of stuff. Even healthcare and pharmaceuticals, I'm very much on the fence with. Airlines, things that pollute an awful lot and aren't making efforts to switch that, or that I don't think, or that I don't believe will even be able to switch to a sustainable business model. I avoid those kind of companies as well. So overall, the goal here really is that I believe you can make money in a lot of different areas of the market. There's opportunities everywhere. So I don't think you need to sacrifice your ethical position on things to to make good returns. So that's how I approach ESG. Obviously, I also care about the social side of things and the governance side. Fair wages for employees and good working conditions. A company that actually cares about the community that it's in, and serves products that are actually useful and meaningful to the public, and aren't just trying to profiteer or form big monopolies. And treat customers poorly. So all of those things play a significant role in how I like to invest. In terms of portfolio fit, really that's about looking at once I've identified a position that I want, it's making sure that it does fit within the portfolio, that I'm remaining diversified to a good degree, and keeping risk under control. So yeah, that's more about making sure that I'm always exposed to multiple sectors, and that I'm watching out for potentially stocks that are going to impact on each other's prices in a significant way, and make sure that I'm aware of those risks and how that will play out. Then we have sentiment. Sentiment has become increasingly important. I think this year has already been a good demonstration of that. We had the GameStop stuff at the start of the year and Wall Street bets. We have Rivian at the moment trading at a $125 billion valuation. Tesla trading at trillion or so. There's some really big valuations, and part of the reason for that valuation is that there is demand from retail investors, especially, to be invested in those companies. The sentiment is strong around the products and the brand and the leadership of those companies, and around the stocks as well. People want to put their money into things that they believe in, and so understanding what is popular and what is not, and what causes that is also really important in terms of investing. And making sure that we don't get caught out trying to do something like short Tesla or short Bitcoin, for example. And then the last thing is technical analysis. This is not something that is a huge part of what I do, but it is there, and I do occasionally do swing trades or short-term trades. It's more important for me in terms of hedging positions as well. So I do look at charts and use some relatively basic technical analysis just to try and make sure that I'm at least taking a look at that, because that is essentially a chart is really a way of measuring sentiment and even fundamentals to some extent. All of that is really mapped out on a chart, so you can read quite a lot from a chart. I'm not an expert at it, but it's something that I do employ when I'm making trades as well. So looking at Q3, portfolio themes. So this is essentially kind of where I'm exposed at the moment. This doesn't mean that it's always where I'm going to be exposed, but obviously following 2020, quite a strange year, we had to make sure that we were positioned to try and take advantage. So some of these themes are things that I'm going to be in pretty often and are always kind of floating around my portfolio. Some of them are companies that I haven't invested in before, or even industries that I haven't spent a long time investing in before. But generally, the goal here is to remain diversified and control risk at the same time as trying to capitalize on the current kind of cyclical nature of the markets and where markets are trying to put their money. So first of all, we have renewable energy. In that picture, what looks like a pretty grey concrete building with an elephant drawn on it. That's actually a form of grid storage. So that's a thermal storage project by Siemens. I can't actually remember. I think it might be in Spain. And I put that in there actually to kind of highlight that renewable energy isn't just about wind and solar. I have a lot of investments in wind and solar, but there's a lot of stuff going on in hydrogen. There's a lot of stuff going on in kind of how you store energy and all sorts of different methods that are being explored by people, not just batteries. And you know, I'm actively monitoring that market, and I think that market, especially with what's been going on in Europe recently with the grid stuff, is increasingly important to people. Next, we have transport and logistics. So again, I said that I have a bit of a background in logistics. I don't have any nuclear at the moment, no. But it is something that I'm watching. Transport and logistics is the next thing. So for my background, you know, I have a good amount of experience in dealing with logistics generally, and a good understanding of the business model. I mean, it's you know, it's not the most complex thing to understand. But generally, you know, I've been investing in companies like UPS and FedEx and stuff over the years. I've been investing in some of the air freight services and some of the shipping services and things like that. But at the moment, my focus is more in freight rail than anything else. I think the market's pretty interesting at the moment, but we'll talk about that a bit later in the presentation. But that's one of the big themes in my portfolio at the moment. Semiconductors and automation. So many of you will hopefully know that AMD is probably one of the trades that I'm more well known for. I picked up AMD in 2016, 2017, and have been running with it ever since. So it's I think actually over that period it's still the best performing, probably beaten by Tesla now, but it's certainly one of the best performing stocks out there. So very, very proud of that. But it's more than that really, and I lumped it in with automation as well, because really this is about hardware and about smart hardware and automation as trends. So that can be industrial automation and robotics, like what we see with ABB, or you know, Eaton and some of the other companies that do things like looking after electric grids and infrastructure, and it can be down to semiconductors or things like that. Next up, we have technology. It's a very broad definition here, and you know, you could break down technology into so many different segments, but I am mixed across several of them. So everything from Peloton, which I think infamously has come to backfire somewhat, through to Microsoft and cloud services, or you know, hardware for gaming or esports. All of those kind of things to me kind of sit within the kind of technology section. So again, another sizable part of my portfolio. And then we have cryptos. I mean, you could almost fit this under technology as well, but cryptos I think are kind of their own thing. So I've been investing in crypto since 2013 in Bitcoin. You know, I was around when the Ethereum ICO happened and when it forked into Ethereum Classic and everything that happened with that. I've seen the launch of Cardano, of Solana, of you know, EOS, of IOTA, all of these different technologies, and it is an interesting area to follow and be investing in. But it's you know, it's a volatile one, so it remains a relatively small part of my portfolio. I limit my exposure there to around 15% because of that, which is still actually quite high. But I do try and obviously monitor the markets and make sure that we're not overexposed during periods of extreme volatility, or if I feel like the market's turning bearish. Yeah, there will be a Q&A at the end. And then there's entertainment and consumer goods. So this really is almost a category to catch everything else. I mean, there is always going to be some small positions in companies that don't really fit into these other categories in my portfolio. But at the moment, this is actually more of a trend in my portfolio and has been since COVID hit. Really, when the market bottomed out, I started to look at, what are going to be the best recovery plays that still fit in with my criteria following ESG and portfolio diversification, and also protecting against the effects of inflation as well. So theme parks is where I kind of placed most of my bets there. Currently, I'm holding Six Flags and Cedar Point, and I think that those were good bets, and we saw some good returns last year. But for Q3, it's actually been reasonably quiet on this front. I think the reopening trend is kind of starting to slow down now, and we're starting to see the real effects of that. So looking through the benchmarks, you can see my headline number at the top. I'm not going to shy away from the fact that if you look at all of the other numbers on the screen, I performed the worst out of everything. There are a few reasons for that, and we can look into those a bit more a little later in the presentation for Q3. But although this number looks pretty bad as a headline, I think it's understandable when you look at some of the specific companies that I'm in, and also when you look at the volatility of the markets during the period. This is the same period of time in which we saw that really steep decline in markets right at the end of October. So that really, if it wasn't for the past 2 weeks of October, we would have been flat or in the green, I think. And I guess the other thing is to look at it with some context. So what this period is only measured up until the end of October for Q3. But if you go and look on my charts in eToro, part of the reason that we had this larger drawdown during this period is because I was positioning to benefit from the rebound from that move down. And that is exactly what happened. So if you, when you tune in for Q4, then you'll see that actually I outperformed the market substantially in Q4 and regained that loss and some extra as well. In terms of the different geographies, you can see markets generally were pretty flat except for cryptocurrencies. Talking about the US first, so the S&P was essentially flat. It did rally, and then again it corrected towards the end of that period following the Evergrande situation in China. The Nasdaq outperformed, so tech stocks finally started to do a bit more work. Throughout the year, the S&P 500 has actually been outperforming the Nasdaq. So a lot more brick and mortar stuff, which is kind of expected when you consider that those were the kind of companies that got hit the hardest during the COVID outbreak in 2020. And in 2021, the tech stocks have started to cool down a bit. There was a lot of money already invested in there, so there's been some profit taking. A lot of those companies have kind of hit their saturation, and we're seeing money return to consumers and investors, all kind of returning to a lot more of these brick and mortar stores. But I think that trend is slowing down, and we should start to see technology outperforming again soon. The other notable thing here really is that although those companies, those brick and mortar old companies, are starting to do quite well again, the Russell 2000 shows that some of the smaller companies are still really struggling from the effects of COVID and still trying to keep up. I think part of this is to do with the amount of money that has been thrown towards the big tech companies and towards the more broad, big name companies over the past few years, that they have the opportunity to buy out a lot of these small companies and have been doing so. So that's part of the reason for it. I mean, there's a lot of different trends. The larger companies just generally were better positioned to raise more credit. The smaller companies have more debts, and from what we've seen from inflation and stuff, there was a lot of reconsolidation of debts by the big companies, whereas the smaller companies may not have those kind of opportunities. In Europe, the UK has been pretty much flat. The Stoxx 50, again, reasonably flat, slightly down. And the German economy actually got hit the hardest, which, again, isn't too surprising. That's really kind of the bell for industrials and for the Eurozone as a whole. So that's kind of measuring those markets. There's not really too much I can add to that. I don't think the UK is performing better than those for any reason other than the fact that that's where most of the oil and energy companies are based, in terms of where they list. And obviously, those have been doing really well with the energy crisis that's been going on, the increasing demand for shipping and everything else. In crypto, we finally saw the big rally kind of resume in cryptocurrencies. We were down at about 30K or so on Bitcoin during the quarter, and then since then we've rallied all the way back up to new all-time highs now. So yeah, that section's looking really quite good. I think the main driver for the outperformance really through that quarter was inflation more than anything else, the inflation concerns. Year to date, as you can see, despite losing substantially more than most of the benchmarks that I just put up on the last slide, we are still beating the Nasdaq. We're still beating the S&P 500 and the Russell. We're still beating all of the European markets, and we're actually not even that far behind the cryptos as well. Although I'm starting to wonder if that Bitcoin number is correct. I guess it probably dipped quite a bit towards the end of that quarter. So yeah, we've actually done pretty well there. One thing to note on this slide, I'm not going to delve into this as much as I did on the last one. But one thing to note on this slide, I think, is that the Bitwise 10 index, I put an asterisk next to it because it's a new index, and I think it did have some liquidity problems and stuff at the start, so it's not necessarily the best measure of the top 10 cryptos. So for year to date, probably better to just focus on Bitcoin and the CIX 100 as a kind of measure of how those markets have been doing. But I kept it in here because I plan on using it long term, hopefully. I will answer questions at the end, by the way. But yeah, so I'm reading your comments, but I will get to those at the end, which isn't too far away, don't worry. So, talking about some of the stories that were actually driving the markets in Q3, inflation is not so transitory, right? So transitory is obviously the word that we've been seeing coming out of the Fed. It's been coming out of the ECB, out of the UK. All around the world, inflation has been a major concern for economies. But I think primarily in the US, it seems to be the area of most concern for investors. And inflation has helped, right? Inflation has really helped us defend from the effects of COVID. We very easily could have seen the world go into a big recession and a lot of contagion across markets, but we managed to avoid that for the most part, despite the entire world essentially going into a lockdown. But we are now starting to see potential runaway inflation, not hyperinflation or anything crazy like that, but certainly central banks are under a lot of pressure now to raise interest rates and try and get things under control again. But at the same time, they're trying to manage jobs and the labor force as well. And this situation, can be really different in different regions as well. So in the US, you have some parts of the US that are doing fantastic in the tech areas, or the areas that are more focused on energy as the industries. But at the same time, you're seeing other areas that are still really struggling to come back from this. A lot of the smaller kind of mum and pop stores are still struggling. So the government's got a pretty big job on their hand trying to, and the central banks have got a big job on their hand trying to control the situation. And as it stands at the moment, it looks like it hasn't been working too well, and it's starting to get to the point where it's really worrying investors. And really, this theme plays out through the rest of the things on this slide, to be honest. So if we move to the supply chain stuff first, so we saw this huge ramp up in demand for goods and services again after the ship got stuck in the canal in the Suez Canal. We're in this interesting situation where we really realized just how much we rely upon global trade. And it slowed down everything. It hit the automotive industry incredibly hard. It hit a lot of the big industrial companies very hard. Anything that was really importing large quantities of goods and services from China especially was really hit hard. And this situation is still ongoing. The price of shipping is incredibly high. And this is part of the reason that I moved into rail. And I'll explain my theories behind that later. But yeah, this situation is also, of course, partially due to inflation, right? When you're pumping this much money into the economy, and then the economy opens up, people are going to spend money, and that's exactly what we've seen. People spent money very rapidly, and buying everything from furniture to new cars and stuff, and that's put a lot of stress on the shipping industry. The same is true for energy. Again, as everyone went back to work and the offices started and factories started up again, churning out products. First, we saw it hit China, and they've had rolling blackouts. They've, had to make all sorts of changes to their policies for exporting power and coal and things like that. And of course, they're doing this at the same time as trying to make sure that they're in a good situation regarding COP26 and climate targets, and making sure that they're still friendly to the West, especially since the West is not on the greatest terms with China at the moment, following not only COVID, but obviously the trade war with the US and everything else. So China's had to work very hard to try and manage that situation. But we're now seeing it in Europe as well. Over the past month or so, energy bills in Europe, especially around gas, has gone through the roof. Fuel prices have also increased a lot for petrol and things like that. We saw shortages in the UK, partially due to the fear around this, and partially due to labour shortages. But generally, this theme is actually playing out in a lot of areas of the world now. Even in North America, there have been some, not so much any real concerns, but there's certainly been more stress on the grid regarding the adoption of EVs and the increased power consumption and fuel consumption. Labor costs, as mentioned, I mean, this is obviously very directly related to inflation. At the end of the day, everyone's asking for more money to go back to work, partially because they've been in lockdown and they've realized that, they prefer working from home, and maybe their company doesn't let them and they're not being flexible enough, so they're demanding more money. Some of it is just because there's more choice of work out there for people now, and they're deciding where they want to work. So this has been another real problem. We saw it hit the UK very hard in trucking, and the US actually. We're seeing it hit a lot of the restaurant industry and some of the entertainment industries very hard that pay quite low salaries. Supermarkets and things like that are looking more and more towards automation to try and avoid these costs. Yeah, it's been a big deal throughout the quarter, and I think it's probably going to remain a concern for companies moving forward. China Evergrande situation. So this is obviously a huge construction company in China that has, is still on the brink of insolvency even now, and trying to pay their debts, and it's kind of moving from one side to the other on will they go insolvent or won't they. I believed from the start that China's going to do everything they can to try and stop it. They've got a lot of problems at the moment in terms of their image with the West, and they want to try and keep those trading relationships. And something like this collapsing would really damage their reputation in the rest of the world. So I think the Chinese government are very well aware of the risks of what happens if this does actually collapse. So yeah, generally another not great situation. And also, I mean, again, it's somewhat linked to inflation. There has been a construction bubble in China for a long time. It's been part of how they've managed to grow so quickly is by just fueling money into construction, to the point where they were constructing things that nobody really wanted and nobody's even using. So, as much as they're building some great infrastructure in terms of airports and railways and roads, a lot of the housing, especially that they've been building, is just not being used by anyone. And, that has really come back to bite them now. And there are risks still of contagion from this, but, the longer this goes on without them defaulting, the lower that risk becomes, especially for contagion out into the West. But it's a market that's certainly worth being somewhat cautious around. And then there's cryptos. So as mentioned, cryptos retested their highs, big rebound. We saw the kind of big move into NFTs during Q3 and hype surrounding that. We've now seen, the hype in Q4 around metaverse, and Facebook rebranding and Microsoft announcing a metaverse and everything else. I mean, really, when it comes down to it, a metaverse is essentially just a game world, so it's kind of a meaningless term. But regardless, that's definitely played a role in the rally of cryptocurrencies, along with, of course, all of the dog-themed coins as well. Just going to have another drink, sorry. So looking at trading highlights. So for Q3, I mean, I could have picked a lot of things to highlight, but I decided to go with these. Theme parks didn't really recover in terms of price. The price has been relatively flat, but if you actually listen to the earnings call and you read their reports and look into some of the technologies they've been deploying at their parks to improve their guest experience, and you look at the visitor numbers as well, the number of guests that are returning, things are looking incredibly bullish in that sector. I think, especially for the parks that I picked. So I chose primarily to focus on Six Flags and Cedar Point, whose ticker is FUN. I could have gone for SeaWorld as well. I looked into SeaWorld, but the whole sea life side of that isn't quite so ethical. And Disney really has only been something that I've been in and out of a bit. But the top core two positions are actually parks that generally cater to more local audiences. And that was really important because although the COVID situation was improving, we did see a lot of fear still around Delta variant at the time, and vaccination rates were still not too high in the US at the time as well. And really focusing on these local parks has worked out really, really well because and unlike Disney, they don't have all of these other different parts of a business attached to the company. So they're really just focused on just theme parks. They did some good innovation around queuing systems and around food and beverage and things like that, and even different forms of ticketing to try and entice customers back. And it's worked really, really well. And actually, I'm expecting that next year we'll see numbers above 2019 levels for the first time. They're already pretty close to it. I think they're around 92, 93% of the levels that they were at in 2019 pre-COVID. So things are looking really good for the theme park sector, and it's a good, safe investment in terms of fighting inflation and balancing out the portfolio. Essentially, it's kind of like investing in land and real estate. They don't have to be concerned about importing lots of goods, for example, so the supply chain stuff doesn't really affect them too much. The increased costs in commodities and things like that. The only thing that's really hurt them is the increased cost of labor. So that has been, probably their biggest pain point. But overall, I really wanted to highlight it because although the price hasn't done too well, I'm really confident in how these companies are performing, and happy to see them just kind of remaining pretty stable and helping balance out the portfolio and provide a bit more safety. Next up, we have road and rail. So someone actually asked me, I think, a little bit earlier about rail and what I'm thinking. So I do own Siemens. I also own CSX and UNP and Wabtec as well, who make kind of brake systems and stuff like that for trains, for locomotives. And really, this was a bet on kind of a solution towards shipping, and also on Biden's infrastructure bill, which I alluded to in my last report, and also the kind of trend towards more sustainable transportation. And you can't really, I mean, there is nothing as efficient as a train when it comes to moving goods over land. There's literally nothing that beats it. Even if we have self-driving trucks, it's not going to be as efficient as a train. A rubber on tarmac has just got more rolling resistance than steel on steel. And that's not going to change. And it's also something that's very resilient to the labor shortage problems that we have. I believe the US is likely to start adopting high-speed rail, and companies like CSX, Canadian Pacific, are working on those projects. They could end up being the people that run it. They could be the people that own the tracks. They could be leasing land to those companies or selling land to those companies for those things. There's a lot going on there. There's also a lot of technology like improvements coming to how the actual network itself is managed. So again, this is a good part. It's not the entire reason, because Siemens do an awful lot of things, but this is part of the reason why I'm invested in Siemens as well, and some of the other countries around, some of the other companies around electrification. of these things. Part of the reason I picked Wabtec is that it's a really good company in terms of utilizing some of the cool developments that we've seen in EVs, but for rail. So if you think that regenerative braking, where you're essentially winding a motor backwards to bring energy back into a vehicle in an electric car, is cool. Imagine doing that when you've got a train that weighs, well, I don't know how much it weighs, an awful lot, and how long it takes those trains to slow down. Regenerating that energy and then using that energy again when required to help power the trains up hills and things, especially over really long distance routes, which the US and Canada are full of, is really, really cool technology. So I'm pretty excited about that as well. Next up, we have Wix. So it's not always about pointing out your best trades. Sometimes it's about pointing out the ones that could have almost been your worst. Sometimes it's about pointing out your worst as well. And I'm sure someone will ask about Peloton later, so we can do that. But Wix was one that had the potential to be very much like Peloton. And I reassessed the company shortly before their earnings. I didn't like what I was seeing. I didn't like how thinly management were kind of spreading themselves in terms of the focal points of the product. Even though I still like the product overall, and they had underperformed for a couple of quarters now, and competition in that sector is pretty fierce. And so I decided that I would basically remove all exposure. And I did that just in time, because when they released earnings, it fell substantially. It fell a bit before earnings as well, and in total we managed to avoid a drop of around 27%. And this wasn't a small part of my portfolio. This was around 3 or 4%, so probably in the top 10 biggest positions in the portfolio at the time. But I sold out. We avoided that loss. We did still make a loss on the position overall. We still lost around 10 or 11%, I think, on average, which is not great. But we made money on them in the past, so it's swings and roundabouts. But something that I felt was good to highlight. And then the last one on this slide is obviously the one that I couldn't not talk about, which is Ford. Probably the thing I spend most of my time talking about at the moment, it seems. Ford had a really interesting quarter. Their earnings previous to the ones that have just happened, so the one that was actually in Q3, they were really talking about a lot of problems with labor costs. They were talking about problems with supply chain, and especially with semiconductors as well. And this was the quarter where they had to shut down the majority of their factories. They had to shut down in Mexico. Costs of shipping their cars out from Mexico and the US were incredibly high, to try and get their goods into Europe for some of their models like the Mach-E, for example. So although they had good products and they were selling well, it was a really challenging quarter for Ford. But I paid a lot of attention to the earnings call and the questions being asked by analysts, and came away with the conclusion that they had things under control, and that they were working on long-term solutions to supply chain, and also smarter ways of managing their inventory. And really, when we look at the success that you can see in my Ford position now, I think a lot of that came from my decision to add and increase my exposure to Ford during the quarter. I'm still really bullish on them now. Their last earnings call that they just had was fantastic as well. We've just seen the Rivian IPO, which again, I'm sure probably someone will ask a question about. But I think there's an awful lot of things looking really, really good for Ford right now. So if you're wondering why I haven't sold and why it's still my biggest position, it's because I'm still very bullish on them. For Q4 and looking into 2022 as well, I mean, I didn't put the most obvious thing on this slide, which is inflation. It's been on my slides for the past year, really, about monitoring inflation. So I kind of feel like it's a bit of a given at this point. And the situation with inflation, it is getting worse, and we are getting to a point where we're going to have to start considering taking more protection decisions to try and mitigate the potential effects of inflation. But for the time being, I think for Q4 at least, really supply chains are still going to be one of the big issue. Energy prices, especially in Europe, for natural gas and things, and how that affects different types of products, not just for natural gas, but also for oil, also for electricity. A lot of the grid in Europe, especially in countries like Spain and France, has been transitioning more towards solar, although there's a lot of nuclear in France and the UK as well. So these countries are going to be under some real pressure in terms of electricity, because the other thing is, of course, that natural gas isn't just used for heating our homes across much of Europe, but it's also involved in producing electricity. So that's another really big theme that I think is going to be very important to monitor through Q4. And the US even actually has some exposure to this as well. And the US, they're debating at the moment stopping oil exports, for example, because of some concerns around the security of having enough for what they need through the winter. So yeah, there's a lot going on in the energy market, and I think it's something that needs to be monitored very very closely. What about politics regarding gas? Yeah, so I mean, just to clarify, like I am not someone who's going to be trading natural gas and things like that, but I will trade the renewable companies in the space, and possibly some of the companies in grid management or electrification, or people that are finding other solutions that are impacted by this. So, for example, I am invested in Car Carrier. Car is the ticker, and in Train Technologies, TT. And those are two companies that provide alternative heating solutions that are much more environmentally sustainable, and they're looking really good um, for benefiting from this kind of thing if it continues as a long-term trend, which I think it will. I think we're going to see this increasingly, each winter, at least until we start to kind of really push our grids to the next level of kind of the next step in their evolution. And then there's cryptos. I said at the very start of the year, and I don't like giving price targets, but I did give a rough price target of 100K for a Bitcoin by the end of the year. And although we're getting a bit close to the deadline to still achieve that, I would say that it is still very possible, especially with what's going on with inflation at the moment, and the launch of the ETFs that we've been seeing. So cryptos still look really, really good, and I think they're going to play an important role in remaining hedged against some of the effects of inflation. And that's that's a core part of my strategy. And at the moment, I have no real intentions on decreasing my exposure to cryptocurrencies. We're exposed to Polkadot, Solana, quite a few other things that have been recently added to eToro as well. So that's also helping us out in terms of managing risk and also getting a good return without going too crazy. So that's more or less it. I will now attempt to answer your questions. If you can, please try and keep them on topic and only ask about things related to, Q3, Q4, maybe a little bit talking about the future and stuff. But I am doing a dedicated Q&A live stream. So if you've got questions about copying or about eToro or whatever it is, what my favorite color is, you can ask that stuff. You can ask that stuff in that stream next week, which is on Wednesday, and I'll be happy to answer it. But yeah, type your questions. If there's something I've avoided or I've not expanded on, and you want to ask a question or something in the portfolio that's interesting, then fire away. And of course, just before I start answering those, part of the reason that I put these social media links on here is to make sure that you guys are following the right accounts, because there are people impersonating me that are trying to scam people. They have successfully scammed people for substantial amounts of money. I'm never going to message any of you guys individually unless it's, I mean, it would have to be a pretty strange situation for me to do that. So please make sure that you're following the right social media channels and be vigilant. I don't manage a portfolio on behalf of anyone individually. I don't do it outside of eToro anywhere. So yeah, make sure that you are careful about that. Okay. So Wix. Interested to hear your thoughts on on Wix L, Wix London, yeah, London on the LSE. Yeah, similar stores being Q. 80% have been refitted, modernized. Split from Travis Perkins, 163% growth. Yeah, it's interesting. This is actually a market that I did play around with a lot through 2020 mainly, but not in the UK so much. I did do a couple of trades in the UK around that sector, but in the US, there's kind of a similar situation, right, where you have Home Depot, which is kind of like B&Q, and then you have Lowe's, which is, I guess, more of an equivalent to Wix. And both those companies offered great dividends. The sector for home improvement and things in 2020, especially when everyone was staying at home, was really, really good, and people looking at new kitchens and bathrooms and everything else, and spending their money on those kind of things. And so that was a really nice trade. And I was more focused on Lowe's because it was more of the kind of the underdog in the sector. And I do actually really like Wix. I haven't looked into this in depth, and I didn't even realize that they had split from Travis Perkins, to be honest. I'm not sure when that happened. It's again, it's not one of my core markets, so it's not something I actively follow. But that is actually a really interesting stock to bring up, and yeah, it may be one that I look into a little bit. Not sure if now's necessarily the right time to invest in it. I'd really have to look at the fundamentals and listen to the earnings calls and see what they think are driving those markets as well that they're in. But I do think that more broadly there has been a bigger appreciation for the homes people live in and the offices that they work in, and how nice those environments are. So I think that we may see a kind of a permanent shift towards people maintaining those spaces or building new spaces a bit more carefully, whether it's for a home office or whatever, or if it's something else. It's an interesting sector to look at. So yeah, I'll take a look at it, but I don't have anything of value I can add about it, I'm afraid. What's your overall exposure to cryptos? At the moment, my exposure to cryptos is around 10% currently. My limit really is about 15%. So, there is room for me to grow it a bit more. And perhaps I will. I've been playing around with it a bit, and it does fluctuate a reasonable amount as I try to mitigate some of the bigger dips if they occur, or if I feel like the kind of sentiment is changing, then I do reduce exposure a bit or move it around between some of the different cryptos that I hold. But yeah, my exposure is around 10%. Thoughts on the cybersecurity sector, Cloudflare, etc. Yeah, so Cloudflare's quite an interesting one. I actually played them quite a lot when they IPO'd, and through 2020, I actually did invest in them quite a few times. But really, it's not somewhere that I feel super confident in terms of my knowledge of the product and the business model and the competitive landscape. So although it is a trend that I can definitely see being really, really important, and Cloudflare especially, I did really, really like them based on the valuation that they had at the time. And I think I made some reasonable profits trading them. I'm not sure it's ever going to be something that's going to be a major part of my portfolio, simply because it's not something that I understand well enough. And I'm not sure that it justifies the amount of research and work that would be required for me to get to that level of understanding. I'm not going to rule it out, but it's definitely, it is one of the things that it's still on a lot of my watch lists, and I do monitor it, but really I think the space there is actually becoming more competitive rather than less, and I think I'm just not sure if it's necessarily going to be one of the best value plays. But again, I haven't really looked at it too much since 2020, apart from, I know that they had a blowout earnings this year. And, so I've seen bits about it here and there. But it's not something that I'm really actively looking at. But again, you know, I'm always open to suggestions. Just like the guy who recommended Wix, I may have a look at that later. Even if it's just, you know, it may well be that I have a look at it and I decide that, you know, it's not worth the amount of work that would be required. But yeah, when you guys suggest stocks to me, I do generally go and look at them. Do you think the metaverse could be the next big thing, as it's advertised by Facebook? 5 to 10 years horizon. Yes and no. Metaverse, in terms of the concept rather than the company, it will absolutely be a really big thing. I do think the world is moving towards doing more and more stuff online, and really metaverse, as much as you know, there's an awful lot of hype around the terminology. To be honest, an awful lot of hype. Realistically, it's just a new interface for interacting with people online. That's all it is really. It's like it's like we're moving from a command line interface from, you know, Microsoft DOS or something like that to using a GUI, graphical interface, and that's kind of like the sort of step it is. But you need to I think you need to consider a lot of the potential risks with this sort of thing as well. So, and also, like, you know, what really what benefits does it really bring? It can be really good if you're trying to do things like architecture or like 3D planning of something, or events. There's a lot of kind of areas of like design and stuff like that where the technology can be really useful, where you can kind of be virtually in a room with people while you kind of construct some sort of a physical, in that virtual world, plan of something. And for work like that, it's extremely useful. In terms of gaming, I mean, we're already there for gaming. Really, it's just about you know, growing. You know, we've had Facebook have obviously had the Quest and stuff out for a long time now. We've got Steam with the Valve headset, that I can't remember, the Index. And there are a few other competitors out there. You know, HTC is still doing a lot of stuff in the space. So, well, not so much now since they got bought, but yeah, there's still a lot going on here. But I mean, you know, Snapchat was looking into this space for augmented reality not that long ago. I mean, I think that this is a really overhyped sector, to be completely honest. You know, the number of mentions there were on earnings calls so far this year compared to previous years. If I remember, I'm trying to remember what the number was. I found the number yesterday, and I think it was 167 or something like that. 167 mentions of the word metaverse during earnings calls. Whereas in 2017, 2018, 2019, 2020, it was like 1 to 3 across those years. So, you know, it's a bit like blockchain, right? Nobody was talking about blockchain until everyone was talking about blockchain, and now every company's saying they're going to be on the blockchain. And a lot of, you know, Disney was saying that they're going to be the biggest metaverse, and you've got Roblox saying they're the biggest metaverse, and you've got Microsoft saying they're the biggest metaverse, and you could make an argument for all of them, right? You can say that Facebook's the biggest metaverse already, because it's still a digital world. When you go onto their website and their services, you are kind of entering that world. Sure, you're not surrounded by it in 3D space, but you are kind of participating in that world. So yeah, in terms of metaverse, there's a lot of concerns, to be honest. The technology's still got a long way to go for a lot of it. It's certainly not friendly to people with disabilities, people who wear glasses. There's an awful lot that needs to be improved about this space before we really see widespread adoption of it. And the cost needs to come down dramatically as well. For the hardware that's required for it. So, as much as I do think it is a long-term growth sector and that there's all sorts of potential, to be honest, I'd be really wary about any companies that are really hyping it up at the moment. We're going to be waiting years before we see anything really tangible, even from the likes of Facebook and Microsoft, who are committing quite heavily to this. And you know, we've got to make sure that we're supporting the companies that really are building this for the right reasons, and you know, actually addressing real world problems and creating solutions for consumers, rather than just adding arbitrary technology for technology's sake. Because otherwise, you know, who's gonna pay for it, and where's the revenue model? You know. And there's some arguments to be said about, you know, the decentralization of it, and you know, who controls us and stuff as well. Do you really want to live in a world that's controlled by Mark Zuckerberg. That was a really long and kind of rambling answer, I know, but yeah, something that you could talk about for quite a long period of time. Exposure to Peloton, I dramatically reduced my exposure following the poor earnings. Well, not that dramatically at the time. I waited a little bit because I was expecting them to announce a new product based on what they said on the earnings call. I knew it would be within a week or so. I expected also that it would probably test the support level at around $50, which it has done. I haven't checked it today. I'm kind of intrigued to see where it is actually. Yeah, okay, so it's still at 49 at the moment. Yeah, I mean Peloton was a rough ride. There's no two ways about it. I really liked the vision of growth by the company and what they were trying to do. I do think it is the kind of market you have to be aggressive in to try and get that market share to get subscribers, because ultimately the business model relies on subscribers really for long-term profitability, and they need to get those subscribers before Apple and Amazon and Zwift and whoever else is moving into that territory takes them. So it's very important to try and get a dominant position, which is why I was bullish on the company in the first place. I really believed in their goals of doing that. The new product for me was a bit disappointing. It is a very good product, but I think it's going to be very hard to sell. And I would much rather have seen them come out with something a bit more kind of tangible for users, because as much as the technology inside the kind of webcam system for the Peloton Guide is really, really good, and I think a very valuable product and compares very favorably against things like the mirror from Lululemon. At the end of the day, most people are going to look at it and think it's a webcam, and they're going to wonder, why am I spending $490 or whatever it costs on a webcam? In reality, it's much more than a webcam, right? It's connected to the cloud. It's doing a lot of vision learning kind of stuff, and there's a lot of AI in there, and it's basically a full-on PC inside it. But people don't see that, and I think it's going to be a bit of a tough sell. And they just didn't make enough noises about cutting costs and saving money for me during their earnings call. So I reduced it further since then as well. Currently, I think I'm at around about 2%, maybe a bit under 2% exposure. And I'm pretty content with that for the time being. I'm kind of willing to let that ride through. At the end of the day, we've already incurred that big loss from that big drop. They've already decreased the guidance. So I'm kind of willing to wait and see where it goes and how it bounces. I still believe in the company long term, but it may take longer for them to kind of get themselves back onto the right course than I initially anticipated. I am very far behind chat in terms of questions, by the way, so please don't ask your questions multiple times. If you are, I will try and get to it. But if I don't answer it, there's always the stream on Wednesday. It's only a few more days to wait. Is nuclear energy green energy for you? Yes, broadly speaking. Broadly speaking, yes. In terms of emissions, it depends how you define the word green, right? In terms of emissions, yeah, I mean, it doesn't emit anything that's hurting the climate, right? Which is really the primary concern, I think, for most people. Most people are really concerned about, nitrous oxide and CO2 and methane and things like that. And nuclear doesn't do that. For me, the problem with nuclear at the moment is the time it takes to construct, the lifetime of the plants, and the decommissioning and then storage of waste materials. And I know that there's been a lot of research into lithium salt reactors and lithium salt, molten salt. Don't know why I said lithium. Getting confused with batteries for some reason. Molten salt reactors are a really interesting technology, but that's been talked about for about 30 years now, and we haven't seen anything tangible come from it. We have Rolls-Royce and a few other companies looking into SMRs, and again, SMRs hold a lot of promise. The idea of building reactors on a factory line, and then deploying them in smaller localized situations. And Rolls-Royce are pretty well situated to build that sort of thing because of their history of doing it in shipping for the military and exploration vehicles and things like that, exploration boats. So yeah, there is a lot of potential in that technology, but again, we haven't seen it working in the real world yet. How long is that going to take to develop? How expensive is it going to be? I see a lot of risks there. Generally, I think there will obviously be some environments that are very well suited to it, and I think that it will take some market share. But generally speaking, I feel like the cost and the time are the two big concerns here. Is it going to be as cost effective as solar or wind? Certainly not. Is it going to be as cost effective as solar and wind with batteries? Possibly in some situations, depending on geography. Is it going to be as cost effective as just building a big long cable from a country that's currently really sunny to a country that's really dark? Again, it's debatable. There's a big undersea cable from Morocco to Spain. There's I think two of them under construction at the moment. There's one going from Morocco to the UK. There's a lot of other potential around fixing the storage problem for solar and wind. And if we do that, then I think solar and wind are the most scalable and the fastest, most importantly, the fastest solutions to be deployed. So that's where I'm generally betting at the moment, but I wouldn't rule out nuclear. I am watching it. I'm watching the space, but for me, it's a little bit hard to justify at the moment. China cutting back on their coal power plant building outside of China could be interesting because China is really big in nuclear as well. So perhaps they're going to start building nuclear for some of the other countries that they're working with, mainly in Northern Africa and those kind of regions. There is potential in nuclear, but I'm just not sure that it's going to be as competitive as wind and solar. To be honest, and especially in terms of the timeline, I think that really is for me, the biggest problem. But my opinion may change when we start seeing SMRs actually roll out and get tested and stuff. What about Bitcoin electricity prices? Are we going to see a big correction this winter? I think I skipped one. Hold on. I skipped quite a few. Where was I? Copy block and AUM. Do you feel like it will influence your trading? No. I mean, I've been copy blocked for the entire year pretty much, so things are going to continue as they are. eToro have fixed quite a few problems actually behind the scenes. They don't get enough praise behind the scenes when they do actually fix things. I haven't really had too many problems trading recently, despite managing or controlling a lot more funds. So I'm pretty happy with how things are at the moment. I don't feel too restricted. There are still some restrictions, obviously, in terms of liquidity and stuff, but it seems to be improving overall. So yeah, I'm not too worried about that. Do you participate in Polkadot parachain auctions? No, I mean I've been watching the auctions, but I'm not like paying loads of attention to it. I'm bullish on Polkadot generally, but I don't really have anything I can add to the parachain situation. I mean, I think the project's got a lot of legs, and we'll see who actually uses the technology and who doesn't, and if maybe people just speculate on the parachains and sell them off or whatever. Bitcoin electricity prices. I mean, it kind of feels like you've broken this into two different questions. What about Bitcoin electricity prices? Yeah, Bitcoin uses a lot of electricity. It kind of inspires more adoption of solar and helps solar companies make more profit in many ways, and reduce the cost of goods because they can scale more rapidly. I think mining generally is not great, to be honest, and I'm definitely more in favor of proof of stake for the majority of chains. But I think Bitcoin, realistically, when you think about it, it's probably not going to move away from mining for a long time, if at all, to be honest. And that comes with its own problems because it does generate heat and it does use a lot of electricity. But I think the idea of trying to force a decentralized cryptocurrency to not do that is obviously kind of outrageous. I don't know how it's possible, right? You can ban it as much as you want, but all it's really going to do is the same thing that happened when there was a war on drugs, right? Drugs didn't go away. It's been 20 years. The war is lost. Drugs are still here. Same on piracy on the internet. You can ban downloading films as much as you want, but until there is a good alternative, people are going to keep doing it. And there's no way of policing that. So for me, the solution regarding Bitcoin's emissions really is to try and incentivize, and we'll see this happen anyway as some of the big mining companies go public and IPO and things. Try and incentivize those companies themselves to make sure that they're running sustainably, and perhaps even put pressure on them through investors and shareholders. And generally, we just need to move to a clean grid. If all of that electricity is generated from solar, then honestly, it doesn't really matter too much, um, how much mining they're doing. There's still, of course, the raw materials for the hardware and stuff, but that's pretty negligible, really, on the grand scheme of things. Thoughts on cannabis industry? Personally, long Tilray. I like the cannabis industry. It's a little bit too speculative for me. You'd have to be paying a lot of attention to the politics in a lot of countries to really make sure that you're, fully understanding the risk and the opportunity in terms of legalization. There's the medical side of it as well as just the recreational side. I fully believe that it will get legalized in most countries eventually, and then taxed appropriately. And I think that's generally a good thing. Would I be investing in it? I think personally, if I were to do it, I would probably just go with an ETF. It feels like a lot of research would be required to do individual stock picking. And for me, I think it would have to remain a reasonably small part of your portfolio, because over the long term, it's going to be a really competitive industry and the margins are probably going to be relatively thin. So I think the advantage of picking an individual stock rather than just going with an ETF that covers the sector for the amount of work that's required probably isn't worth it. But again, I think it's an interesting future trend to look at. I definitely think that over the next 10 years, we're going to see most countries move towards legalized cannabis. First group will be operating the HS2 tracks upon completion. Have you any interest in that rail stock? Generally, no. I don't think operators is. They make good profits, but at the same time, most countries that have good railway setup are doing it through public ownership, especially across Europe. There are, Japan is private and stuff like that, but I'm just not sure. I think it's a pretty risky prospect. There's a lot of politics also surrounding how well it does. Rail generally is going to take a longer time in terms of passenger rail to pick up from COVID, and we're seeing that already. The rail industry has been struggling much more to get people back on trains, and part of that is also the commuting trend has really changed. High-speed rail is a bit different to that in that you're going to get more people traveling for leisure as well as just business. But yeah, generally, I think honestly, I think the biggest area for investing regarding rail is going to be around the trend of electrifying railways, and maybe some of the companies that are building the new trains, whether they be for passenger or for freight, and then for freight rail operators. I think freight rail is really the area that should, logic dictates that freight rail should be the thing that picks up the most, to be honest, especially with the global shortages we're starting to see in that specific market for labor. And I think self-driving trucks are further away than people think. So I think hub and spoke arrangement for freight rail is where the opportunity is in rail the most, to be honest. And of course, in just rail construction generally, especially in the US, which hasn't really got any yet. I think high-speed rail is definitely becoming more viable there now, especially with the land costs in America, whereas in Europe, trying to acquire land in Europe is a nightmare because it's just so expensive because it's so densely populated. Any thoughts on Path, UiPath? Yeah, UiPath, again, it's not something that I really look at too much. It's just slightly too far outside my my range of kind of competence, I guess you could say, my field of competence. So, yeah, again, I'm aware of it. I'm very happy to see Romania with their first really big company doing well. I think they're from Romania, if I remember correctly. They look like a good company, but for investing, probably not something I'm going to go into yet, at least not in the near term. What are you trying to achieve, Jaynemesis, in this real world? How are you helping the poor? Well, I mean, I think I'm helping the poor in quite a lot of ways, actually. First of all, I donate 10% of my profit each year to charity, which is more than most people on my income do. It's not great, I know, but it's better than nothing at least. I mean, to be honest, I make a very conscious effort to try and invest in companies that genuinely help people. I am one of those people that believes that capitalism eventually comes to an end, because I don't think it's that efficient. I think we will eventually move towards something closer to socialism, and it's a very unpopular opinion to have in the investing space, but I just think that's reality. We have limited resources. We have, a large population that, although capitalism has done well at lifting a lot of people out of poverty, it does do it slowly and it does it very unevenly, and it's open to a lot of manipulation and a lot of corruption. So I do think we're moving that direction. But while we're under this system, the way I see it is that I plan on taking advantage of it. There's no point in me sitting here and complaining and purposefully not trading markets and making money, just because it isn't helping everyone, right? I would rather do what I can to try and help people than do nothing. So I invest on behalf of 25,000 people. Most of those people are from actually poor nations. The Philippines, for example, is my second largest country in terms of the number of copiers. Those people are not millionaires. They earn less. Most of them will earn less than the average UK salary. So I think I'm doing quite a lot to help the poor in terms of I'm helping people save money for their futures, kind of like a pension fund might do. And I also think that I'm supporting companies that I'm vetting based on how they treat their workers, how they treat their staff, how they treat regulations and how they comply with regulations, and the governance of those companies and their impact on the environment. And of course, the ethical situation of the products that they provide. I don't invest in military, I don't invest in gambling or smoking or fossil fuels, or I mean, like the list goes on. So I think, yeah, maybe I'm not going to be perfect for every socialist out there who maybe thinks that I should be doing more. But to be honest, I would say that you should probably focus on the people that are actually avoiding paying their taxes and stuff rather than me. That's my opinion. I'm sure there's going to be some spicy comments while I said that further down in the chat. I'm going to answer a few more and then I'm going to call it. So, because this is going on for a bit, I know there's a lot of questions. I will be streaming again on Wednesday though. So I'm going to answer like, I don't know, 4 or 5 more questions. I'm not too far behind you guys. But yeah, if you are thinking about asking a question, probably just hold it for now. And come back on Wednesday if you can. Or of course you can join the Discord. If you type exclamation mark Discord in chat, then you will get a link to join the Discord, and you can ask me there, and I'll try and reply to you on there. Let's see. I've lost where I was now. Metaverse becoming incredible implications on health. Yeah, that's very true, both mental and physical. Yeah, totally agree with that. Toyota finally going into EVs in cooperation with Subaru. Can they compete with Ford? No, I don't think so. I really think they're largely too late. They've got a lot of work to do, and realistically, it's kind of like a half and half situation, because as much as they may be looking now into EVs and battery technology, Toyota has already committed an awful lot of capital towards using hydrogen, and understandably, because in Japan, the government in Japan, Japan is a country that likes to do things its own way. They invented Abenomics, and they kind of have their own sort of weird system of economics. That's very different to most other countries. They were the country that went, all in on high-speed rail very, very early, when most countries were really developing highways and car-centric environments. And now they're going big in on hydrogen, and they're building offshore refueling stations for shipping, and all of their car companies are focused around hydrogen. And I think that in that individual market, I could totally see hydrogen working, just because of the fact that everyone is going down that route in Japan. And so splitting their efforts and having to spend all of that money on R&D and all of the different production techniques and the intellectual property and things that are required, and the partnerships that they have to build out to go for hydrogen at the same time as doing batteries, I just don't see them being able to do it anything like as efficiently as the companies that are just purely focused on battery electric vehicles. So, again, it's one of the companies that I'll be watching. But first of all, they're starting from further back. They've got to catch back up again. But yeah, I wouldn't be betting on them, to be honest. I'm afraid. Watching Gabe Newell talk about VR and where he thinks it's going is fascinating. The more direct human brain interfaces, and he says much further along than people might think. Yeah, I mean, I can, I don't know. I think, I think when he says that, he's saying it's further along than the general public think. I don't think it's further along than I think, to be honest. Like I was one of the first people to use Microsoft's HoloLens in the UK through the fortune of working in the gaming events industry, and I believe we were the first company in the UK to have access to it that wasn't, a really big official partner of Microsoft. And it arrived, and I was working in logistics at the time, so I was the person that unpacked it and tried it before anyone else. So I got to use that really as the technology was emerging, and I own an Index upstairs as well, and use VR, and I like VR. But I still think that there's just so much work that needs to be done. I also follow futurology a lot, and they've talked about a lot about that kind of human brain interface stuff. And there is some interesting stuff there. Like there's the guy from Warwick University in the United Kingdom, professor who's got chips in his brain and in his nervous system and stuff, so that when he moves his arm around, it will move a robotic arm that's connected on the other side of the planet and stuff. And I follow the whole transhumanism movement and things like that very closely. I still think we're a really long way away from it. And the other thing is that ethically, especially when you move more towards that side, more towards the transhumanism side, and modifying your own body to be permanently connected with these things, or having kind of more permanent augmentations. That's where things start to get pretty sketchy ethically as well. So yeah, there's you could talk about this kind of subject at length, and it's something that I really like, but I think that it is still a long way away, though. Realistically, in terms of investing in the space and for a reasonable risk, it's going to be another 5 years, I think, before that side of it really starts to see anything tangible. On the VR side and the AR side, yeah, that'll come a bit sooner, but still, I think in terms of picking a winner and making good investments in those spaces, it's going to be a case of waiting and seeing what happens. Yeah. I want my own nuclear reactor. What about hydrogen? Hydrogen with the nitrous oxide. What do you mean? I assume you're talking about from natural gas, in which case we just don't make it that way. Would be my solution. I mean, hydrogen's kind of a difficult substance to control. It leaks from things very easily because of its kind of the way it is made up chemically. But these things are solvable. Like you have to store it in pretty stringent conditions. But I do think that it is one of the most efficient batteries, forms of a battery, if you want to call it a battery, that exists. It does to have a lot of cost to convert from electricity into hydrogen through electrolysis, and then to use a fuel cell to turn hydrogen back into electricity again. But it's the only thing that we can use right now at scale that does that. There is nothing else as scalable as hydrogen right now, and I think it's going to take batteries quite a lot longer to get to that point. And there's still the problem with batteries regarding the decay of the buildup of stuff on the anode in the batteries. That's still a problem, and I know that there's new kind of sulfur-based batteries and things like that that are kind of trying to address the problem. But right now, if we wanted to deploy large-scale battery storage solution for energy across the world right now, hydrogen is the only viable option. And I think its time is coming. It's probably going to be the fuel source of choice for aviation. It's probably going to be the fuel source of choice for shipping, because the ships can be retrofitted easily. Boeing and Airbus are both working on new plane designs specifically for hydrogen. There's a lot of research and money pouring into this space, and I think for good reason. Okay, I'm going to answer two more. I know I said 5 more, and I've probably done 5 now, but I'm going to do 2 more, and then I'm going to call it. Opinion on cryptocurrency. Oatly. I think I may have skipped the question on Oatly. Okay. What are your thoughts on Oatly going forward? Oatly is an interesting one. I learned a lot of lessons beyond meat. I was glad to, it's a situation kind of like Wix, right? I was very bullish on it following the IPO, and we made some good money, and then it started to stagnate, and then they started not to really execute and scale as quickly as I felt they needed to through 2020, and I exited the position, and I was happy to have done that. Not because I don't like the product or the founder or anything like that, but they just weren't growing at the pace they needed to really take market share. They weren't reducing the cost enough to attract more customers. There were a lot of problems. For Oatly, you could very easily kind of look at Oatly in a very similar kind of view as Beyond Meat, right? Kind of overpriced, overhyped, new fad in how people consume food and drink products, right? But I don't think that's really the same. Their branding is as strong as Beyond Meat's. They're very, very well known and very synonymous. And the famous Super Bowl advert, the guy literally just sitting there playing the piano and singing poorly about Oatly, who, if I remember correctly, was actually the founder of Oatly in that Super Bowl advertisement. Kind of a weird, cringy advert, but it became a bit of a meme and a bit of a hit as a result of that. But the brand awareness for Oatly is really, really good. And unlike Beyond Meat, it's not really expensive. In fact, in many countries, it's cheaper than milk. In most countries, actually, I think. And that's Oatly, right, who stick a big premium on it because they are the brand. They are the branded company, and they've done more research in making it, more, better for coffees and for hot drinks and things like that, and have all these different versions of it. It's a very scalable product. The water usage for it is really, really good and things like that. So on the product side of things, like I think it's down. In terms of execution, they managed to spread globally very, very quickly. It's not the same. It's not even remotely similar to Beyond Meat. Beyond Meat was predominantly the US and Canada, and then it slowly kind of started to spread some of its products to some countries in Europe. And that's still roughly where we stand now, right? Like, you still can't go into a shop in the UK and buy all of the Beyond Meat products. They're just not here yet. And pea protein obviously got in more demand from people and stuff, whereas oats is something that's just much more readily available and much easier to plan for, and it's just a much better prepared market than for things like pea protein or soy or stuff like that. Maybe not soy. Soy is actually a really big market as well, but the point is that it's just inherently much more scalable, because of how the product is produced, and because of the costs involved in that. And not only is it more scalable, but they've actually done it. They went from essentially being available only in the Nordic countries, into all of Europe and the US and Canada, and now into Latin America, and into many countries in the Middle East, into parts of Asia now. Huge partnerships with the likes of Starbucks and stuff, and it's at the point where people go into a coffee shop and they don't ask for oat milk; they just ask for Oatly, and that's really important. I think it's kind of like a Coca-Cola moment. Worst case scenario, I see Oatly being acquired by someone like Coca-Cola or Kellogg's, or one of the really, really big companies in food and beverage. Their margins are going to be reasonably low because it is, at the end of the day, a food product, and there's only so much scaling you can do with it. But I'm just really, I'm pretty bullish on the company overall. I think it helps with the portfolio structure in terms of giving us exposure elsewhere. So I guess those are the reasons really that I like Oatly. It's from a fundamental perspective. If you compare it with other food companies, it doesn't stack up great, but I do think that there's still a lot of growth left, and I think that they are in a position where they can become the dominant brand in oat milk, by a really substantial margin, purely almost entirely based on brand. Some of it is obviously some technology improvements, but realistically it's mainly around brand. So that's why I like them. Okay, last question. I'm going to skip ecology because that's not really as relevant for this, but I'll talk about it on the Q&A stream if you want. And the same with features for eToro. I've already talked about Peloton a bit. Opinion on retail like Amazon. It's kind of off topic. I mean, I don't really have anything invested in that space at the moment. And so I'm probably going to skip that one and leave that for now. Unless that is actually the last question I have. I should really change what my bot says, because it says, oh yeah, it's the official Jaynemesis eToro Discord. Okay, good. I think market capitalism is the way forward. Socialism really works well. Yeah, but nor does full-on capitalism. I think a hybrid system is what we need for the next 50 years or so, and then probably after that, unless we've expanded into space, we're going to be forced to move more towards socialism, simply because of resources. Yeah, I don't think there's any other questions really. Do you think there will be any places for esport in the market in the near future? Yes, I do. I think Corsair is a good route into that. I think Discord, if they ever IPO, will be a good route into that. I don't really rate skills too highly. There's not really that many publicly listed companies in the space yet, but I certainly think it's a big market and will be a huge market eventually. There are going to be routes into it through entertainment and streaming platforms like Twitch and stuff or whatever, but something that I'm monitoring. I think that's gonna do for now. I will be streaming, as I said, again on Wednesday. So if your question wasn't answered, and I know I skipped over something, it's not that they weren't legitimate questions about Amazon and stuff, but it was much less really related to my current portfolio or to Q3 or Q4 really. So I wanted to skip that for that reason and keep this somewhat focused in on where things are at the moment. But I'll be streaming again on Wednesday at 4 p.m. again. So make sure to tune in for that. That's a full-on Q&A stream. It'll be longer than this one. I'll be answering more questions. Happy to try and answer as much as possible. So yeah, come back for that if you can. Please again check out my social media channels and the Discord. Throw a follow on Twitch. If you do that, then you will be notified when I go live in future. Follow me on YouTube. If you didn't catch all of this, you can catch the recording on YouTube. I'll be uploading it, and it should be up on YouTube for tomorrow morning. And that's all. You can check out my portfolio on eToro, etoro.com/people/Jaynemesis. Everything's public there, so you can see my full portfolio, all the trades I have and everything. Even if you're not copying me, even if you're not on eToro and you're from another country and you just happen to land here, you can do all of that stuff. So thanks for watching, everyone, and I will see you guys next time. Cheers.